Hello and welcome everyone. Thanks for joining our governance call 27. And today we have a couple of things on the agenda. I'm gonna start with a governance update, and the last couple of months have been some of the busiest in our DAO in terms of submitted proposals. So a lot of proposals have gone through. So to start with some of those that have already passed, there were four proposal this passed the snapshot vote, and that is CP104 financial reporting, CP105 data protocol that we're going to hear about in a minute. And then there is CP107, the updated Treasury spending agreement, and CP108, centrifuge migration to OpenGov. All of those proposals passed, and since we didn't have a chance to hear about CP104 and CP105 in the last governance call, we're going to start with a short presentation of that from the authors of those proposals, and there's time for a couple of questions afterwards as well. So let's start with that. And Dennis, if you are here with us, would you mind talking us through about the financial reporting and what that is about?
Yeah, happy to do that. Just to be sure, like I haven't prepared a presentation or something, right? Just like go through what the proposal is about is fine.
Yeah, absolutely.
Yeah. All right. Cool. Yeah. So short summary, like the main idea was to build standardized real-time financial reporting capability for centrifuge pools based on the data that is currently available in the subquery. So we have a lot of data already available on chain, and now also more and more in the reporting tab of every pool in the app. And we're working on improving that. What we don't have yet is like have these reports really in a structured format that is also required by a lot of financial institutions and financial professionals. And this is the first step to do so. So not only like have like all the trades and have all the investments, but actually enrich this data. And the focus here is then on standard financial reporting, such as building balance sheets, income statement, and cash flow statements, so that they can be automatically viewed in the reporting tab, but then also like as a time series be exported as CSV and so on. So the normal things you usually would expect from a financial application and the data that is built based on that. That's a short summary. Yeah. Any questions? And happy it passed, by the way. Awesome.
Sorry, what?
Very happy that it passed as well.
Oh yes,
should
yes.
have started with it.
Yes. Well, yeah, no, they passed all of those proposals we're gonna hear about now. So yes, congratulations with that as well. So there is time for a couple of questions. If anyone wants some things clarified around this proposal, then feel free to ask now.
I can chime in right there if it's okay.
Yeah, sure. Go ahead.
I'm just directly going into legal considerations. So are there any privacy, confidentiality, or legal concerns about showing certain financial details of the pools publicly?
All this data is publicly available anyways on chain, right? So it's more a question of actually putting this together, so it's easier for like the investors or users to have this in the format they would probably build themselves anyways at some point, right? So this wouldn't necessarily replace official like financial reporting certain funds have to do anyways off chain, but it would, for example, make it much easier for them to already have this data instead of putting this together themselves. So yeah, we don't see privacy concerns because it only uses publicly data that is publicly available anyways.
All right then. So and the next question from my side is, how detailed can we get those reports? Like, for example, can I see the balance sheet for a whole pool, or just zoom in on just individual asset?
Individual assets, the data will also be available, but this will be different reports. So the balance sheet would always be on pool level, aggregated on pool level. So aggregating the valuation, for example, of all the assets in one report there.
Okay then, thanks.
All right.
Good.
Thank you very much, Dennis, for coming and talking us through it.
Sure.
So appreciate that. So we can move on to the next one, which is CP105 for the data protocol that also passed. And Fredrik, would you mind telling us what that one was about?
Yeah, of course. I'm also happy that it passed. And it also is tightly related to what Dennis was talking about. The data protocol in general is something that we need in order to share data that's partially private. So while all the reporting data is, public and everything can go on chain, most of that, if it's not too heavy with respect to the size of the data, you don't want to put private data on the chain, but you also don't want to store it in, an AWS database or something like that, because that makes it quite isolated and really hard to retrieve. So the data protocol is similar to IPFS, but with the possibility to hide private data basically from people who are not allowed to receive or see it. So we use the chain basically there as an availability layer. So you get permissions that are stored on chain, and then you can just ask basically the blockchain network, where everything else also, is wandering around, transactions, everything, for this private data. And you can imagine if you go through some of our pools and you look at an asset and you are an investor and the pool issuer gave you read access to private data, you not only want to see what's publicly available, but also data that the issuer wouldn't share, publicly basically. And the data protocol is our way of easily allowing that across different pools, so that we don't need to write, isolated integrations for every database that the issuer is basically using. And the end game would basically be the high level objective graphic. If you look at the CP105, where you can see that, the issuer has its own setup. They have like the data pipeline to automate stuff. And then you have the whole protocol consisting of the chain state and the data protocol, where, from the right side, some participants might see public data. The data protocol will also store the heavy public data that you don't want to put on chain, but that you still want to show, like maybe images or large PDF files or contracts, something like that. And then everybody can basically use the protocol all together to retrieve every information that you need to have. And the data protocol data itself is always anchored on chain, meaning that you have a commitment made on chain so that everybody sees, this issuer actually committed to this data being stored, so that you can be sure that the PDF that you're seeing is actually the one that the issuer, for example, signed off from. Yeah, that's the rough structure of it.
Thanks a lot for that, Fredrik. There is time for a question or two if anyone has regarding the data protocol. Things to be clarified. No?
Maybe you can answer this, Orhan, or either Fredrik or Dennis, but I'm curious about how these will be added to the roadmap, which I understand will happen from now.
You mean to the roadmap that Jerome lastly proposed? Yeah, we will add basically an amendment to the current one. Once that has passed, that we can actually work on that. But this will happen soonish. Now that everything is through.
Cool. I think that it's just to say, like, it hasn't seemed simple to do this, but I think it's great to see that these technical proposals are going through governance and being approved by token holders, and then obviously integrated into Centrifuge's roadmap. And this to me is a really strong sign that decentralization is alive and well, and obviously building in the open is functioning as well. So congrats to both of you for that, and to all the engineers.
There was also one question in the chat: what restrictions have been considered for zero knowledge proofs? Well, zero knowledge proofs are great, but I guess you cannot prove everything. PDF, I guess, is not really provable. It's just if you build the right circuit, basically, there are some nice toolings around that where you can bring that on the blockchain, and maybe one time in the future we don't need a blockchain at all, because you can prove every execution that you did in an AWS environment. But I think for now, zero knowledge proof are at least for us, maybe something for the future where we have heavy computations that we can't do on chain and you want to prove just the result. But for that, it's not really possible at the moment.
Thank you for taking that, Frederick, as well. Anything else? Otherwise, we will move on.
Yeah, there was also
there is one question. Yes, Cesar, can you ask yourself that? We'll take that as the last question then.
Yes. Can you please explain the collaborative sign-off process in more detail? I'm not a tech guy, but I'm really into the consensus mechanism. So how will consensus be reached among document collaborators on the every state of documents?
There's no, for example, there's no blockchain-like consensus. It's similar to if you have a Google Doc, for example. Basically, what Google is doing is doing a best guess, on what was finalized. And the data protocol will also assume that if, from a protocol perspective, we assume that a data node, you always need to commit your chain on state, basically. And this, if both participants have started from the same state, committed a different one on chain, then if we have actually a clash where two different data nodes stored the same document under a different state, then those participants basically must off-chain agree on what they want to do, but this is in a highly competitive race condition. Usually those documents are not something where you fear something like that would happen, but it's rather two entities that say, hey, we have a contract or we have this data. Somebody commits to it, the other one sees this and says, this is valid, and then you also commit to it. It's not, there's nothing problematic about having two diverging states and then rolling one state back and agreeing on another one afterwards. There's no consensus engine in between the steps, so it's just humans talking to each other saying what is the next state, basically.
Okay, got it.
Great questions, and thank you for the answers. So thank you to both of you for coming and talking us through this. That's greatly appreciated. So we can move on. By the way, just a friendly reminder to those of you who haven't muted yourselves, please do so now, and then you can unmute whenever you want to speak. So just a friendly reminder. Now, the two other proposals that passed, we've already discussed in previous governance calls, so I'm not going to go too deep into them, but just give a quick overview of what they were about. And that was CP 107, the updated Treasury spending agreement. So it was an amendment to a previously made agreement, which basically says to still be conservative with the spending of the Treasury funds, but not completely avoid them. And also try to establish a group, a resource and treasury management group, to look after these things going forward, how to spend the treasury funds wisely. So those were the agreements that were made and passed with that proposal. The last proposal that passed was CP 108, the Centrifuge OpenGov migration, which means that we are ready to move forward there. But first, it's going to launch on Altair, and that's going to happen very soon, probably within the next couple of weeks. And then we will use that setup on Altair to battle test this, see if we can make it crash, just creating some chaos just to make sure it doesn't happen on Centrifuge. So that's what Altair is intended for. So there's going to be a lot of referenda being launched there to just try out the different tracks, the parameters that we've proposed, and see how it works out. So that's going to be the next step. And after it's been live on Altair for probably around a month's time, and we can see that there are no issues, then it will be included in a runtime upgrade on Centrifuge afterwards. So to making chaos, yes, well, apparently that was the right word. So let's work towards that. Are there any questions to either the OpenGov migration or the updated treasury spending agreement very quickly? No? Well, from proposals that have ended and passed to those that are live right now, there are still 5 proposals live on our forum. 4 of them are treasury proposals, and we've already discussed some of them in the previous calls. So the treasury proposal from Hydra to deposit liquidity and the RWA lending market we talked about in the last call. And then there's the Stellaswap treasury proposal, which is on the agenda today. So we will hear about that later. And then there was the integration of CFG into Tangem and the 500 branded wallets. So they are the 4 treasury proposals that are yet to go live on chain. And then the most recent one is a new pool onboarding proposal from Anemoy. So this is the second proposal to launch a pool. The first one, the Liquid Treasury Fund, went live in November last year. So Martin, if you are here and ready, then can you talk a little bit about this other pool?
Sure, absolutely. Hi, everybody. Yeah, happy to announce the second pop of Anemoy. I'm here with a teammate, Anil, if you would like to say hello. I can share my screen and give you fun with a few slides, I guess, to give you more details what it is about.
Go ahead. You should be able to share.
And here we go. Is it coming?
Yeah, I'm seeing it.
Perfect, cool. Yeah, so the second segregated, maybe first of all, a short update on Anemoy. So Orhan, thank you for kind of, mentioning already. It's a second pool, though the first pool was tokenized T-bills in a structure which we had established back in the last year, not knowing that we will have prominent followers. So BlackRock with the BUIDL token is using exactly the same structure. It is a BVI professional fund which is able to tokenize its fund shares and distribute the token. So the token itself is really providing off-chain recourse and claims. And redemption capabilities. So that's super unique and kind of nicely protecting investors and really keeps the underlying asset aligned with what you actually hold as a token, and not kind of, adding or actually mitigating the additional risk with holding the token instead of the real world asset. In case of this first fund, the T-bills, obviously, and exactly the same structure is what we are using for the second offering. It's another segregated portfolio under the same structure, again, regulated British Virgin Island professional fund. It will be called, or that already, the name, how we had actually approved it by the Financial Services Commission of the BVI. The DeFi Yield Fund, the full name is DeFi Yield Fund 1 SP for segregated portfolio. And it is a fund-of-fund structure where basically crypto hedge fund shares will be held by this Anemoy fund, and you participate in actually underlying market-neutral DeFi yield strategies. Combining it a little bit here, where I'm actually saying, hey, you're being able to optimize returns. You see on the left side, the existing liquid treasury fund. On the right side, the coming DeFi yield fund, just compare that a little bit, where I think, hey, T-bills is most likely the lowest risk you can have on a market currently. It's basically like investing or holding US dollars, but with yield. Your counterparty is US government or the US Treasury. Where, of course, DeFi yield is higher return, but also higher risk. So currently, we're targeting plus 15%. The starting portfolio, which we would aim for the start, is currently at plus 25. And that is really depending on, DeFi market conditions going up and down, but market neutral strategies prevent you from really losing capital. Where it comes to kind of the liquidity, you already need to make compromises. So it's monthly NAV, 30 days liquidity, and also the fee is higher with the effort it takes really to manage it all. But you can already see, hey, you can, as an investor, have kind of a nice risk-adjusted return for whatever strategy you would actually to go for, and combine both nicely. as a next step of the NMI offering. What you would start with is two very well-known crypto hedge funds. One is RE7 Capital, the other one is Dialectic, both being out there for a couple of years, having a proven market neutral strategy. And again, so also in this floor of target rates I have mentioned, we starting with a hard committed investment already of a little bit north of $1 million that will allow us to invest in those two first funds. So the diversified portfolio will start with two, and as more investors will join over the next weeks and months, also the portfolio will grow, already in negotiation and doing research for a couple of more. So really depending on the size of the pool, aiming for 6 to 10 in the next couple of months, and keep you updated. So few of the kind of details how we select the funds. There's much more to talk about, but just to give you a glimpse on what it would mean is really at least 2 years successful track record, a proven market neutral strategy, monthly NAV and redemption to provide actually also for you a capability to redeem every month. And that the funds itself, of course, have a diversified portfolio into different strategies, have a specific size, etc. The structure just here as an overview is really, again, what you already had presented with the liquid treasury fund, so the same service providers underneath. The difference is really it's not investing straight into a real asset T-bills. In the LTF case, it's investing into a real asset, which is the fund shares of the underlying funds, so RE7 Dialectic in the beginning. Any questions here? Keep it short and crisp. So happy to answer it here or on the Go forum.
I'll jump in with a question super quick if I can. Generally in the traditional hedge fund markets, when you are presenting an investment fund to someone, you're required to show the performance of those funds for the last 5 years or since inception. So where can we go to see the past performance of these two funds you've outlined above? Thank you.
That will be shared with investors. So if you onboard in the onboarding process, of course, that is part of the material. And I think also we haven't just for kind of the time here have which is of course not binding, collected the data already. And if I talk about historic performance, there's a more detailed deck, we are happy to share sooner or later. So where the underlying funds we had selected so far, actually kind of simulating what the combination would look like for the last 2 years or something like that. So we of course did those simulations already, but it depends on the disclosure of the underlying.
Sorry, you said
but we can share.
I was following, but you said the word simulation twice. I thought you said the two funds have been in operation since 2021. So
but it's a simulation
will be marked to market
combination
every year.
Of the two,
Oh, okay.
Mm-hmm.
Oh, understand. Thank you very much.
Ivan, you had a question too. You have
actually two very simple questions. What will be the minimum investment amount and who are the main target clients?
It's again for professional investors, private offering. So the minimum investment, at least in the beginning, will be as for LTF $500,000. And it's again, focusing on the same investor community for DAO treasuries, etc. Whoever is really would like to diversify the LTF investment and kind of add in more risky but high yielding asset class to an already existing treasury investment.
Great, thank you. Great.
Are there any more questions to Martin and the DeFi yield fund?
Let me check the chat. Is there something?
Doesn't look like it. No,
cool.
I think that's it. So thank you, Martin.
I'm still here, of course. Can also. I think you've seen the POP proposal on the Gov forum, and no problem reaching out.
Yeah, if people have any questions, the POP is still there. Yeah, they can write directly there. And just to add one last thing, before this pool goes live, it will go through a token holder vote. So there's going to be a referendum at some point that all token holders will vote on. So just wanted to add that last part. Okay, well, thank you again, Martin. And we can move on to the next point. So this was a lot about the proposals that are made to our DAO, but there are also proposals made elsewhere to other DAOs, and one of them is a proposal to the Arbitrum DAO to basically allocate some of their treasury into real-world assets. And Grayson, what's that all about?
Hey guys. So yeah, my name is Grayson. I do DeFi BD and research at KF. Arbitrum is, for a long time in the making, formed a program called the Sustainable Treasury and Endowment Program, STEP for short. Two main goals of this program is to, one, diversify their treasury into stable RWAs earning yield, and also to grow RWAs on the Arbitrum L2 more holistically. The initial allocation that they're allocating to RWAs is 35 million ARB, and then across several service providers. So Anemoy applied both with, or we applied in collaboration with Anemoy for both the DYF fund and the LTF fund, and as well as most RWA protocols or issuers applied with the deadline at the end of April. So yeah, I think we're really excited to be a part of the mission to grow RWAs on Arbitrum and potentially hold TVL on their network. If selected, it would definitely be a catalyst for us to work on growth within the Arbitrum ecosystem and also build more composability for RWA tokens within that ecosystem. I think some strong points for our application are that we already support the Arbitrum network. I believe that began in September of 2023. We're one of the few applicants to do so. And Anemoy's offerings themselves are also very competitive in terms of pricing with alongside a sound legal infrastructure. So I guess just like a timeline and next steps. So like I mentioned, applications were due around the end of April. For the entire month of May, Arbitrum has a selection committee made up of 5 independent entities. By the end of May, they'll come out with a report with their advised allocations between, I would say, between 4 to 10 providers for that 35 million ARB. Once they publish that report, there will be a period for comment on their forum. Following that in June, there will be a snapshot vote to either approve or disapprove of their proposed allocations. And the actual investments should take place in July. So happy to answer any questions based off that.
Thanks a lot, Grayson. Any questions to the Arbitrum proposals? All right.
I'll go ahead and post the link to at least LTF in the chat here. I'll have it pull up.
Yeah, I think Ivan already, yeah, he did that already. Yeah. He's always a couple of seconds faster than the rest of us. So thank you, Ivan. But yeah, so if this proposal passes all the steps, then you say in July we can expect an investment from Arbitrum into real-world assets on Centrifuge, right?
Yep, if selected, which we'll know by the end of May, early June, then investments would take place in July.
All right, appreciate it. Thanks a lot, Grayson. Yeah, so seems like there are no questions, so we can move on the agenda. Thanks again for presenting, Grayson. So next point on the agenda is a treasury proposal from Stellaswap. So there was one last year for incentives, I believe. So Steve, would you mind talking about what this one is about, the recently submitted one?
Yep. Hey guys, my name's Steve from Stellaswap. So basically, relatively recently, Stellaswap had a treasury proposal on Polkadot accepted. So we're getting around $1 million, which we're going to be allocating to our farms over the coming year. And there's going to be allocated to a mix of blue chip farms, so bridged ETH, BTC, etc., and also parachain assets. So we have an allocation of, I believe it's 1,000 DOT allocated towards Centrifuge liquidity farming rewards over the coming year. And this proposal on Centrifuge's governance is to request Centrifuge tokens to be added in addition to the DOT and Stella that we're contributing from our other proposal as liquidity mining incentives to be launched in tandem with that other campaign. The goal is to create deep liquidity for these assets on Moonbeam. Moonbeam is the most heavily trafficked parachain. So if you're an EVM user, coming into Polkadot for the first time, most users are coming into Moonbeam first, and that's where they're getting that exposure to Polkadot assets. So it's a good place to be listed. It's a good place to have liquidity. So the first thing I kind of want to talk about is, and get feedback from you guys about, is that proposal for the Centrifuge tokens. And then the second thing I kind of wanted to bring up and talk about a little bit, if anyone has any opinions. So the comments on the government governance forum were a little bit mixed in terms of the level of enthusiasm for allocating liquidity incentives. So I wanted to throw the idea out there that maybe some point in the future, if you guys don't want to go this way, if you guys like the protocol-owned liquidity situation that you have with Hydra, what might those logistics look like launching on a platform like Stellaswap? Strictly talking about logistics and feasibility. So I guess at this point, I kind of want to open up the floor to questions and comments about either topic.
Thank you, Steve. So just to clarify, the requested amount from the Centrifuge Treasury was it 4,477 CFG. That's the request amounted in the proposal in its current state, right?
Yeah, when I made the proposal, I believe the market value of that is $3,000. It should be, the proposal was made a couple of weeks ago, but the number should be somewhere around that.
Okay. All right. Sorry. So yeah, are there any question to Steve and in general about this Treasury proposal? Like, is this good spending of the Treasury? Is it a good proposal? What do you guys think about this?
Yeah, hey, Oren, can I jump in?
Yes, for sure.
Oh, awesome. Hi, everyone. Monty here. First governance call, so I will try to do my best. Thank you, Steve, for this, let's say, overview of the proposal. I just wanted to, let's say, discuss this because, in my opinion, the Stellaswap proposal needs to be put in context also with Hydra, but in general also with the other, let's say, pools of liquidity for CFG token that is on chain, right? So right now we have 3 pools of liquidity. One is on Stellaswap, where there is 15K worth of TVL. If I remember correctly, one is an Hydra that is 700,000, right? And is also Pulse. So this means that the Centrifuge Treasury is actually actively liquidity providing into this pool. And then there is a third one on UniV2 on Ethereum that it's pretty much the same as Hydra, right? So 600,000 worth pretty much, and it does 70K or so volume daily, same as Hydra. Now, I think that Stella is not asking for a crazy amount of CFG in order to incentivize liquidity, but since there is already a lot of liquidity in CFG on Hydra, and Hydra is already making 70K worth of daily volume, that's the same as UniV2. I don't think it's the smartest way for the CFG community to have the TVL and liquidity split across 2 different pools in the Polkadot ecosystem, right? Now, I'm well aware that Stellaswap has something similar to UniV3 style pool, so it's way more efficient than Hydra because Hydra also has an intermediate token. So when you want to swap DOT to CFG, you need to do DOT to the synthetic asset to CFG. So it's always 2 swaps instead of 1. So you have more slippage, and probably like price execution is worse in Stella. But I would say that we need like maybe we can make like another like discussion in the forum. But I would suggest for the community to limit the liquidity to one single source on chain on Polkadot, and in this case, it's already like Hydra. In this case, no hard feelings, Steve. This is just my opinion. And I would also say that another thing that would be really important, in my opinion, to discuss is that since we got like Lucas made a proposal to deploy a lending market on, I think on Base was the proposal, right? And we will need a CFG pool. Like we need to allow users on Base or like another layer 2 to buy CFG tokens, right? So we'll need to like quote CFG to list it on like a DEX. Could be on Base, could be an Arbitrum, but it's gonna be like on layer 2, right? So this is also to discuss the other proposal that Hydra made, that they wanted like I think 5% of the treasury in CFG to add as like additional liquidity. So I would also say that I'm not sure if that proposal got approved already, but I would also say that's something that needs to put in context with like having another CFG pool of liquidity on layer 2 instead, because that is what I would do. Thank you.
Thanks for sharing your point of view, Monty. And
hey, this is Spaz. Of course, I'm biased. I'm not on the Hydra team at all, but I'm definitely a proponent of the other Hydra proposal. The two things I would point out: one, Stella has been making this proposal to each of the chains, and so on the interlay proposal, I asked whether there was a way for Stellaswap to allow governance to control their tokens being added to Stellaswap without custom deploying a contract, and the answer I received was no. I think the user was Ogre444. Anyway, it seems to be a person on the Stella team.
Yep.
So,
yep, that's me.
Cool. Okay, so yeah, I'm curious about governance bodies controlling funds as POL on Stella. I think you'd need to figure out the ways to do that through XCM. From all the documentation I read, that should be possible, but I haven't seen an example of it yet. So if you could come back with a proposal of how you would do the XCM calls to control those funds, maybe each governance body would probably be more open to that. But that's, of course, if you see the comments on my proposal, that's something I've been struggling through, is how to make all the XCM calls correct. So yeah, I don't think you should require a governance body to deploy anything special on EVM chains, but if there's a way to control over XCM, then great. The only other issue I see to providing POL, which I definitely love POL, is Stella is set up as a pair DEX where you have to have 2 tokens. So that means for whatever liquidity Interlay or Centrifuge or other chains would need to provide to Stella, you'd have to sell that treasury token in order to buy the other part of the pair, probably DOT or USDT. So that puts downward pressure on the token. So that's my concerns.
Yeah, and actually, so I remember reading your proposal on the Interlay Governance Forum, and thank you for that. That was a good thought. And actually, that's what prompted me to suggest, well, maybe if we don't like the liquidity incentives here, maybe we can have a little bit of a discussion about if protocol and liquidity would be an option. And you're right. We wouldn't expect to go to Centrifuge Governance and say, hey, could you guys deploy a custom contract to move those tokens over? So that would be something to figure out if there was interest in going in that direction. But it's a good thought.
Any other thoughts? Questions? Comments?
Steve, I'd be curious to your response to what Monty said. And if you have thoughts about, like, you mentioned, like, making your proposal somewhat more similar to Hydra in terms of logistics. Could you expand on that?
Yeah, so this isn't something that I've gone super deep into figuring out, but presumably it should be possible to deploy a contract where CFG tokens get added to a pool on Stellaswap, and you could swap some CFG tokens into DOT, which yes, it is selling the CFG token, which we don't love, but it's then the Centrifuge Treasury holding DOT, which is probably not such a bad thing. You need DOT for the parachain slot, and it's a blue chip crypto asset. It's not a bad thing to be holding. You could also deploy CFG single-sided into a Stellaswap pool. So for those of you who are unfamiliar with concentrated liquidity, when you add liquidity, you specify a range in which you add liquidity. And if you're adding liquidity out of range, then you would be adding it single-sided. So for example, if Centrifuge DOT is trading in a particular range, you could, if you're anticipating Centrifuge would appreciate relative to DOT, you could add single-sided CFG, priced a little bit out of range, and then as the token price moves, that liquidity would get activated, and over time you would end up with a mix of DOT and CFG in that position. So
Okay.
it's something that can be explored and researched a little bit.
Okay, thank you for that.
Sure.
So yeah, thank you, Steve. So it sounds like you need to make a decision whether to keep the proposal as is, so ask for the incentives, or alter it so it reflects what you were suggesting here as well, like to provide the liquidity. So do you have any thoughts whether you want to do that, or do you want to give it some more time on the forum so people can comment a little bit more?
Yeah, I think I'll give it a little bit more time. I'll take the feedback here back to my team and get feedback. And then we'll make a decision if we want to go with an on-chain vote or kind of pull it back and think about going the other direction.
Sounds good. Just keep us updated on the forum post, and anyone else who want to comment on the proposal, suggest new ideas, feel free to do it in the forum post. The link will be in the chat shortly. Find the link here.
And thank you very much, everyone who chimed in here. Appreciate it.
And thank you for coming, Steve, again. And yeah, we can continue on the forum. All right. So that was everything we had on the agenda. There is some extra time now. If there is anything else people want to talk about, could be for any of the other ongoing proposals. If there are no specific suggestions, then Spascoin, while you are here. Oh, Cesar, go ahead. No, go ahead.
Yes. I just want to give more touch at updated treasury spending proposal. So how about if you want to be more conservative about spending our tokens, everything? So can we use milestone-based funding or this kind of thing? Like, let's say X protocol is coming to us asking for some coins, and we are willing to give them. But what if we give them based by milestones? So if we are not happy with the results, then we can keep the rest of the tokens. And if we are happy with the results, then we can keep funding them. So in that way, we can use more effective or spending of our treasury. So just wanted to give it a thought.
Okay, do you want to take that one?
Yeah, thanks, Cesar. I think we can definitely explore this as we set up the Treasury and resource allocation group, who will be the group acting like similar to how the governance group facilitates all governance processes and proposals. This group that we'll set up will advise the DAO on this and actually be able to, we might be able to implement what you're suggesting. Can you give some examples of other DAOs where they're using deliverable-based funding or milestone-based funding?
Yep, sure. We were just building that on Inverter Network, which was a spin-off of Prime DAO. So we saw that there was lots of fraud who was coming to, applying for funds, they're taking the funds, then they're just rug pulling and also applying again after several months with different nicknames, different things. So we thought this is also a problem of token engineering commons, GiveF, Gitcoin. So every protocol just faced that in the past. So we were thinking, okay, how we can do that? Okay, the best way is that we thought is milestone-based funding. So if they deserve it, they earn it. If they deserve more, they earn more. But if they are just, some malicious people or just thing, so we can get back our money, get back our tokens. So this kind of thing.
And how was that executed? Was the milestone like decided by governance discussion between people, or was it automatic?
We tried to do automatic, and then we wanted to go with B2B, but it was a philosophy to keep that in governance. Like I thought you were gonna form a group of research and just a second. At that proposal, I think you wrote that you are gonna form a group who's gonna conduct this kind of analysis, so they can also do keep track of milestone-based funding.
Yeah, that could be definitely an interesting solution for them, because in my experience, you do need someone to track these milestones, and it's actually better done by governance rather than trying to build an automated solution for this. So yeah, I think it would be cool to talk further on this. So let's chat about this, about if we want to implement milestone-based funding. And there's another RFC or a discussion coming up about setting out treasury goals and objectives. So like, so I think like it'd be cool to talk to you about that based on your experience working with Prime and these other DAOs, and maybe even milestone-based funding can be discussed as part of that. So thank you for that input.
All right.
Yep. Can I jump in a second again? So like regarding milestone-based funding, so it's a cool idea, right? And like basically everyone is actually implementing that, specifically like layer 1, so or layer 2, so Arbitrum, Solana, whatever. What I would just say is that it's fine to use it if you have like projects that wants to build on top of Centrifuge, but specifically to what Stellaswap proposed or like what Hydra proposed is more complex to implement, because if they're asking for, let's say, like 500K worth of like CFG to deploy in a pool, it's meaning that when you make the contract with like the milestone base, is like saying I deposit 50K worth of CFG, and I want to see at least like 1 million worth of volume, right? Then if you met the goal, we deposit more, but it's just like more complex to do it like in the context of the DEX and providing liquidity. While it's super easy to implement for like projects that want to build on top of Centrifuge or request like CFG in order to build like a dashboard, stuff like that. And last thing, yes, we need someone that is actually discussing the best possible like contract in the interest of like CFG community versus all these other projects.
Yeah, nice points.
I think it's difficult to be done in the open and like by the community, but it can be easily done by like, I don't know, like this committee you were saying, Kate, and then once like a proposal is reached, like a quorum or something, can just like put the proposal in the forum and we can vote for it or something like that.
So you're saying like the group will like vet possible proposals before they're proposed? Treasury proposals?
I would say also because there's going to be like a lot of spam, like Caesar was saying, right? So I think, at least in my experience, it's just like easier if like the proposal are vetted before by like this committee or however we want to call it, right? And then we can really scream between like good proposal and bad proposal. So bad proposal directly like go away, and then for the good proposal we make an arrangement. So this milestone agreement that Cesar was talking about, and once this is reached, we can post it on the forum in order to get the community approval. Or if the community is not like agreeing on the terms, they can propose like different stuff, just like to save time. Because if everyone needs to go to the forum, I guess the forum will like blow.
Okay, I want to just hand it all. Yeah, I think it's good input. Like, I do feel like we're creating a few extra steps. So we have to assess whether that like, there's a few vectors, right? Like, does that help decentralization or not? Like, how do we rank that. Like if there's like a pre-vetting committee, what kind of responsibility do they take in the end? We have to consider how this will work with the move to Gov2. This would obviously be an off-chain like governance aspect where you write to, it's like the funding group first and saying, this is my intention. And then obviously it could move through to OpenGov. But the last thing I want to say is that of course we should expect lots of proposals, right? Like some spam, but I have a hypothesis that we won't see as much as many other DAOs because we have such a heavy, like not heavy, valid governance process that anyone that comes to our forum will see that it's not going to be so easy for them. That's my hypothesis. Orhan, do you want to comment?
No, I agree. I think this is yeah, we have some security measurements in place to avoid, like, for example, draining the treasury, because there are, once we make the migration to OpenGov, then yeah, it's not going to be as easy. It's easy enough, but there are some security measurements in place to avoid the spamming of the treasury. But I think this is a good discussion to have in the next governance call. So this was just like because we had some extra time, but maybe dedicate some time for it in the next month's call, and then yeah, discuss it thoroughly. And all of you who contributed here, please come back again next month, and we can continue it there. Now, just because I said migration to OpenGov, I just want to make something very clear, that some scammers have taken the opportunity to create some fake groups on Telegram and other places, because they are saying that in relation to this OpenGov migration, there's going to be a token migration as well, which is absolutely not true. This migration to OpenGov is not going to affect the token in any way. You don't need to migrate anything. So there were already some people who were invited, and we got a lot of requests. I just want to put it out there in the open. There is no token migration. So if you see that, it's a scam. So please be alert. Now, before we finish the call, I just want to spend a couple of minutes on one of the ongoing Treasury proposal, the one from Hydra, because there were some discussions and some questions about some of the conditions regarding withdrawing our liquidity there. So Ivan, would you like to just ask that here so we can get some clarity?
Yes, Pascal, I would like to ask you if you can talk more about the restriction of 5% for withdrawal and deposit.
Yes, certainly can. I sent a link to a Medium article, or maybe it's a Substack, explaining why they have a 5% limit. It was because they were worried about somebody quickly adding and removing liquidity from the pool. Therefore, they put a 5% limit in per block. That's not one of your responses on the forum was worried that you could only slowly deposit or slowly remove each day. This is per block, so you could schedule 5% removal in one block, and then the next block, the next block, the next block. You remove the liquidity over time. So I don't think that's blocking. Does that help answer your question? It's really because they're worried about.
Yeah, so technically, Centrifuge protocol can withdraw all liquidity in less than 20 blocks.
Yeah, I did notice in one proposal yesterday that somebody was scheduling it every 5 blocks. I don't really know why that is. Maybe for finality. I was going to be testing with every single block, and then we'll see whether Chopsticks reports an error. So yeah, it might be. I think for yours, maybe it was 40 ads. So maybe that's 40 blocks, or maybe that's 40 times 5 would be 200 blocks, but still pretty quick.
Okay, thank you. This makes sense.
You have any other concerns? I think you had a lot of concerns.
Yeah, I mean, even if this proposal, I don't think that is a really bad proposal, but the first one was really good because it was the first listing for CFG on Hydra days, but with the second one, I mean, I'm personally like a technical still not 100% sure if I will vote aye on this proposal, even because I didn't see any statistic data about the viewers and users and CFG trades a day. I mean, for me, this makes sense.
Okay,
but it's definitely not a bad proposal. I mean.
Thank you. It's hard to get positive aye or nay feedback so far, so I have no idea what will happen when we put this into an on-chain vote. One other question you had was, why is it different now than during the initial proposal? Well, during the initial proposal listing, the listing of a token in the Omnibus pool definitely has to go through governance. So that's why the tokens were sent to the sibling account and then governance deposits it. Now that we're doing the second deposit, that I would like to do that as much as possible just from Centrifuge governance. So it's fully demonstrating Centrifuge controls the coins. And I'm just working through the technical details of making sure that's possible. Right now, what I can see is either the easy button, as I called it, was just do the same thing of send the coins into the Centrifuge sibling account on Hydra, and then HydraDX deposits it. But of course, if you want to withdraw, you don't want to be beholden to HydraDX governance. So I've been trying to work on how do you do this with XCM calls. What I see right now is I can't do an XCM call using Centrifuge tokens for fee payment, but I did demonstrate that I can use DOT tokens for fee payment for the XCM call. I know that there's no DOT in the sibling account on HydraDX. So if I went that route, it would be maybe transfer 2 DOT from the relay chain child account over to the HydraDX sibling account, and then do a swap of some small amount of CFG for DOT just for working capital, and then repay the loan back to relay chain. Sounds a little complicated, but at least then you'd have some DOT in the Centrifuge sibling account on HydraDX that then you could use to pay for this scheduled add or removal of tokens. So I think that's definitely workable. I'm very curious to hear, I think William is on the line, and William, I'm really curious to see whether you have a way to fix the call so you can use Centrifuge, because ideally for all these chains, I'd like to use the native parachain token as the fuel or the XCM fee token. I just haven't worked that out yet. I did talk to Alberto with Moonbeam or Tansy yesterday. He pointed me to the units per second parameter. So I'm gonna go check that on Hydra today. Anyways, I'm still working through what's the best technical solution. So
we're running. Oh, sorry. Go ahead. Finish your sentence, Spacecoin.
Yes, I'm curious for you all's feedback. Would you rather just go ahead and move forward with the simplest approach, or would you like to have the ideal approach where it's all controlled and maybe there's more calls that use DOT to pay for the XCM calls?
I don't think it's a decision we can make here in the last minute here, because we are running out of time, and unfortunately I hate to break it up now, but is this something we can continue in the forum post? Just make it a little bit longer than it is already?
You can. I also asked you directly how to submit the pre-image. Your comment was go through council motion to external motion to governance, but I can't do that because I'm not a counselor. Would you prefer that I'm providing a pre-image to you all and you all put it through council, or should I be submitting as an external motion or external proposal?
I personally think, from a governance perspective, like to put it through the council motion. So if the pre-image is correct, just provide that one, and then the Centrifuge Council will vote on it, submit it and vote on it, and then it will go to a public referendum afterwards.
Okay, great.
So that was what the GCG suggested. So I still think that's a good idea. But we have to stop now. People, it was a exciting call. Thanks for all the great comments and input. It was great to see you. So I'm gonna take the opportunity to say thank you to everyone, and thanks for coming. See you next month, same place, same time. Take care.
Ciao.
Thank you. Bye.